Hello everyone, I'm Mark Zane and welcome to Zane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 29 of the Forex market review. Today we're going to take a quick look at three pairs. All the pairs are correlated together against the US dollar. So even though there may be likely three setups occurring, it doesn't mean you go ahead and take all three setups, because if they're all correlated against the US dollar and the US dollar either goes up or down, then it's likely all three pairs will either deliver or all three pairs will fail. So that's something you have to always look at when you're looking at your risk to reward. And you just look at all three pairs and you might take one, maybe two, and you look for the best setups that are occurring and what may give you the better risk to reward ratio. And you can also look at some upcoming news events, because this could also drive the market in your favor if you believe the news will be positive for the direction you're taking the trade. So without any further ado, let's please go to the charts and look at those three pairs. The first pair we're going to take a look at today is the Aussie USD. We did talk this about 2 weeks ago, the Aussie USD, and we'll just go over it again because the setup is occurring and we want to take a look to see where it may go. So here we're starting on the weekly time frame. We can see the 200 moving day average is starting to come down. If this was to come up and retest that area, we definitely would be looking at a selling opportunity around there, especially if it meets up with some horizontal support areas. At this stage, we're starting to see the stochastic come overbought. So we'll drop down to the daily time frame. And what we can see is what this was wave 3 down for 4, up for 5. We also talked about that this was possibly wave 3 down for 3, up for 4. So both of those didn't eventuate, and this wave pushed back higher, slightly higher than we would want for wave 4. So this possibly could be a 1 up for 2 down for 3, or just an ABC cycle before we see that weekly push higher. Again, it's always sometimes wishy-washy which way wave cycles and analysis is going. We just got to try to take the best approach possible. So what we want to do is look down on a 4-hour chart, and we can see that we're seeing it stepping higher and we're starting to see some divergence. Now we've got divergence across here where we see a higher high in price, and then we see the lower AO. So this is the lower AO, this is the higher high in price. And so we can see the AO starting to step down and the price is stepped up. So that's our first indication where we would expect it to go down. Now it's hit this 200 EMA line on the 4-hour chart. So we're expecting to be a bit of a bounce there. So what we want to do is just see how far and how many waves it's done on the lower time frame. If we drop down to the 1-hour chart, again we can see our divergence with the higher high in price, and we see the lower AO. Now we see this step down motion here. All of this is the wave 3 because it never come back to zero line. It came pretty close but never touched it. So you can see it's come all the way up but just didn't break through on that AO above the zero line, which we like to see. So we can comfortably say that we think this is all of wave 3. And if we zoom in a little bit, I'll just go ahead and drop those numbers in for you. We can sort of see wave 1 there, down for wave 2, down to here. Then push back up is our wave 2, followed by the start of wave 3. So that's our, looks like what we can see on our wave cycle patterns. Excuse me. 1, 2, down for 3. And so therefore we're looking at pushing it back higher for wave 4. We don't know wave 4 has ended just yet until this comes back to zero line, but it's very likely if it steps up it will. And looking back at that 4-hour chart, seeing it bounced off that 200 EMA, I'm got some good confidence that this may bounce from these levels. Some people like to see this push up, retest, enter a market and look at driving it back up, and that's something you can do. And how far would you drive it up? Again, the start of wave 3 to what appears to be the end of wave 3 at the moment. We want to drive it to around the 50%. That will also be bouncing off the 1 hour EMA level, so that's a good area, as well as horizontal support areas. If we click one in there, and we probably have one about there, so anywhere in between the 38.2 and 50% mark is a likely area could reverse, and then we want to have an indicator of it pushing back lower. So that's the Aussie USD. We'll jump across now to the New Zealand USD, also setting up. So weekly time frame, we saw this wave 3 push back lower. It's pulled and then it's pushed back higher. So we have our all the way down to the bottom here. So we have wave 3 down, push back higher for wave 4. It's come to the minimum of 38.2. I like to see it around the 50%, but it's going to struggle next to this weekly 200 EMA level, and that's a good indicator on a longer, higher time frame. We could then jump down to the daily chart, and we started to see it break down. I did mention in last week's video we want to see the push down and push back up, retest and back down again. It just carried on and pushed all the way down, but as we can see with the DSR indicator, it's showing this support area here. Previously resistance becomes support, and that matches up with a horizontal line I've just dropped in there. So it's very likely we're going to find some support there, and the 200, the stochastic is becoming oversold. So that's on the daily time frame. So we want to be looking for the pushback higher. Again, I'll draw these numbers into you for the wave patterns. Here we have wave 1, the start. Then we have it push back down. And then the push back higher is wave 2. So 1 up for 2. Wave 2 can't break the high of wave 1, which it hasn't. It's lower. Then wave 3 push back lower. Because it's hitting that support area, I like that it's going to probably push back higher. It just closed just down through the 200 on the 4-hour chart. So it had some bounce, push back, fell down. It's probably going to find a bit of retest there and then push back higher. How high will it go? Again, we want to be looking with our Fibonacci retracement tool, and we can see it pull down and push back higher, and we're looking around the 38.2 to 50% mark, but it might find some resistance around this level here. So that's something we want to be watching out for. We can see the stochastic is oversold now, so it's very likely it could push back higher, and on those higher time frames we had divergence to show that the uptrend is likely ending. So we have our higher high in price, and we have our lower AO. We can take it actually all the way from back here. We can see it stepping all the way down, and that's the same as taking it from here and seeing it stepping all the way up. So that's our 4-hour, and then we drop down to the 1-hour chart to see some immediate divergence. We want this other tool, grab that, higher high in price, lower AO, clear divergence because it's back below the 0 line before it made its lower AO, so therefore it's definitely moving lower. And on that 1-hour chart we can see clearly now 1, 2, down for 3 because it didn't come back to 0 line. Again, it came very close like the Aussie, but it didn't, so it's very likely we can count all of this as 3, and we want it to push back up to the top. So that's another pushback higher. Again, you can look at buying opportunities on both the Aussie and the New Zealand USD at this stage. But myself, I'm looking for that pushback and then the retest of some support areas before and Fibonacci levels before it pushes back lower. That's the game I'm in. So I can put my stop losses about 100 and so pips up, and I can write it down for another 150 to 300 pips and make an easy 1 to 1.5 to 1 to 2 to even 1 to 3 risk to reward. The last one I want to look at is the USDCAD, and as you can see, I've currently got a trade set up on this one. I decided to leave this one on just to show you that I am in some of these trades that do occur. As we can see, we have this on the daily chart, a big push down lower for wave 3 and a step back higher for wave 4. Wave 3, we know the end because it came back to 0 and we follow back to the beginning, so it's somewhere up here. We could always put it up, if you want a worst case scenario, put it up to the top there. It hasn't physically pushed all the way back higher on the daily time frame to indicate to sell, but in this case I'm selling for other reasons. On the 4-hour chart we can see it stepping up higher. As you know, I like to see my divergence, so I like to see the higher high-end price, which I have there, and I like to see the lower AO. Clear divergence back below the line and back up again. Again, higher high-end price and the lower AO, that's giving me my divergence. I'm then looking for the push back lower. So if I drop my indicator roughly around there, drop down the 1-hour chart, again, higher high-end price with my lower AO indicating divergence, clear divergence. So as the price is stepping up, less people are wanting to buy it. That's the easiest way to look at it, and therefore we then look for that next push back lower. And here we can sort of see the start of wave 1 up here. We then want to see all of 1 push back higher for wave 2. So here we can see wave 2 push back higher. We then want to see that pullback of roughly around 61.8%, which we have seen, exactly 61.8. We then look for that next move lower. So what I want to do is just show you wave 3, the pullback for wave 3. Grab the indicator. This was the start of wave 3. Push back lower all the way down to here. See the large AO come back to 0 line, so we know it's ended, so we can draw that point in there. That's the lowest point. It's at its ABC cycle back up. It came up to the 50% area where I like to see it, and the horizontal support areas. We'll go ahead and draw that in. It's pretty much exactly where I entered the market, at the 50% retracement and a horizontal support area. Unfortunately, it stepped higher on me. That's fine because I got my stop losses up here. I have my reasoning. It's definitely pulled back the wave 4 into wave 1 territory, which I don't like to see. So it's getting to the point where I'd be looking at getting out. Now this one may still deliver, it may not, but it's pulled back. It's pulled back too far now. We really didn't want to see it break to 61.8, but I've got my stop losses just up these levels here, and I want it to see if I can ride it out. So I'm really looking to see if it's going to run out of steam on this push back higher. And the reason why I'm doing that is because I'm using divergence again on the lower time frame, and I can see this movement up here where it's stepping up and stepping down all the way down. So it's getting higher high in price but lower clear divergence. So me, it's looking at running out of steam. I didn't see the divergence when I first entered, so it would have been good to enter there and then the pullback. But we just still, sometimes we just hold the trade of that little bit longer, but you never adjust your stop losses. Just remember, I've always planned for my stop losses to be above these levels. So I'm risking, close to 100 and something pips, and I want to try to make at least 100 to 200 pips. So just remember that in future. I'm not allowing this to adjust my stop loss, because what I'm seeing, I'm allowing this because my stop loss has already been put high enough before I took the trade, expecting something like this to happen. So that's always something to remember. So that was week 29 of the Forex market review. You can see one trade I'm short on, the USDCAD. Hopefully that delivers. If not, I always trade the plan regardless, and there's no motion in play, and do not adjust stop losses. Make sure you have your exits for profit or loss before every trade is taken. We wish you all the best in your success. Take care. Bye-bye.